Kaltbaum Capital Management President and Fox Business contributor Gary Kaltbaum. Gary, it's great to see you, sir.
Happy holidays to you.
Yeah, so again, last Friday trading session of the year, if that means anything. I doubt it does, but it sounded good when I wrote it. So what do you expect from the broader markets for 2026? I mean, I'm wondering if you're aligned with Deutsche Bank. Deutsche Bank predicts a 16% rise for the S&P next year. 16%. B of A says 6%. Kind of a wide spread there.
Watch oil prices, watch yields. If they continue to do what they've been doing, we're going higher and probably will be double digits. My biggest issue is valuations are not cheap. They are expensive. So if we get any problems with oil or yields, I think it will have more trouble. But this whole year, energy prices have drifted lower all year. The 10-year yield has up a little bit from the lows, but way off of the 4.8, and that's helped borrowing costs and that whole works. And again, if that continues, I think that's a 1-2 punch that helps.
You know, we always talk about the Santa Claus rally. That's December 24th through January 5th. And, you know, some are saying if we get a lot of volatility in these next few trading sessions, I realize volume is light, and but they say if we see extreme volatility, that kind of portends to a rougher first month, January trading.
I think it's going to be on the quiet side in the next few days,
okay.
But typically January can be a very rough back and forth month, and that's my expectation. There's some technology stocks I'm watching very closely, and I'm hoping they pull them back, and they probably will. January has this great reputation of driving you up a wall, and I suspect we'll get a little bit of that.
Well, no, that's when you got a buying opportunity,
oh, yes.
And I think a lot of people are always looking for that. Let's talk about these sectors. You mentioned tanks, financials, and you mentioned the banks. So are there specific sectors you're watching in particular to kind of give you an idea of where we're going to go in 2026?
Banks and semiconductors. Semiconductors, number one. Banks, number two. If they're acting well, market's going to be a good stead, and it's impossible to go into a bear market if they perform. Right now, I'm loaded with the banks. They're acting very, very well. I even own Citigroup, which is still down about 85% from 2008, but just broke into new high ground and is doing fine. And the semis, they've had their back and forth this year because of a lot of noise on AI, but they're performing again. And I think we're in good stead going forward, at least into the first quarter of the year. And I'm hoping there's no more AI blow-ups because we've had a few in the last few months.
There have been. We'll get to that in a second. But I want to kind of go back to that financial sector story right now. Are there any stocks that you like right now in the financials? You mentioned Citi. Understandably, if something is that beaten up, you want to get in there. But a stock like a J.P. Morgan, a stock like a Goldman Sachs have been strong winners. It looks like from what I'm seeing to my left here, to your right, these are not the names that you're picking.
No, we're in Citi, we're in Morgan, we're in Schwab. Okay. But from Bank of America in the B all the way to Wells Fargo in the W's, they're acting very, very well. And even the private equity stocks, which have been in real bad shape, they've been coming on strong. So you can be looking at BlackRock and Blackstone and Evercore and things like that. And again, I think what's happening here is the market, sometimes you just got to follow the bouncing ball, and they're going into financials. And again, very important, we've never had a bear market when financials are performing in a pretty good way, and so far so good.
Well, I mean, we've got this huge IPO pipeline that we're expecting for 2026. I mean, there are still a lot of companies that are going to come to market.
Yeah.
A lot of talk about SpaceX. I'm sure that's something that's going to be on your radar. You know, Goldman, at least the trading desk at Goldman, they're looking for technology stocks to continue to extend those gains into the year, but they're calling the fallen angels the ones to watch. These are now well below the highs. This is Roblox, Visa, MasterCard, DoorDash. What do you make of these names, this fallen angel strategy?
I'm a big believer that stocks that are weak are there for a reason, so I tend to stay away from them. I look for the leading stocks and leading groups, and right now, what I'm looking for on pullbacks are memory and semis and data. They've just been strong. And I can tell you there's some names that are growing their earnings 200-300%, sales 100%. And if that continues, they're going to be big winners going forward. They've had a real good last 6 months, but I expect more to come. But watch them closely because memory prices can go down as quick as they go up.
Sure. I'm going to give you a twofold question here. I want to get your thoughts on the Fed race. We're down to technically 4 candidates, but really I think it's down to 2. You know who I'm talking about. But also I want to get your kind of your overall strategy for 2026 and what are the biggest risks that you see to the stock market right now?
If the stability of oil and the free market, not the Fed, what they do with their yields, the Fed funds, if they go the wrong way, I think that'll be big trouble. Because they have been, a great tailwind for the market. There's nothing better than the cost of energy going down and the cost of borrowing going down, and we've had our way this whole year. That's going to be my big focus. Again, if it just stays stable, I think we'll be in pretty good shape as we move into the new year. Just remember, we have a few other good things to come: lower taxes, less I love the less regulations.
Yeah.
By the way, the banks have been performing much better in the last 3 weeks. When the Treasury Secretary came out and said, we're looking at the onerous regulations on the banks from 2008 that we think they went too far, and immediately the banks started doing better.
We're absolutely in a deregulatory environment right now, and putting a final pin on the race for Fed chair. If you look between Kevin Horsch and Kevin Hassett, either of those those choices, and that decision, we don't know when that's going to come from President Trump, would certainly be advocating for lower interest rates. You make borrowing more affordable. That helps everybody down the pike. So we'll see if that plays out.
Hopefully, because if they're not careful enough with lowering their rates, that can incite inflation. Remember, inflation is a monetary phenomenon. That I believe Jay Powell, with his printing to $9 trillion and taking rates to zero, was one of the big causes of inflation going to 9%, with Biden increasing spending like crazy. So I'd be real careful, and they should pay attention to the market. If the 10 and the 30-year keep going higher while they're going lower, something's up, and they need to react to that.
Well, he's going to be Fed chair through the middle of next year, so we'll see. Gary, it's always great to see you here.
Pleasure. Thank you.
All right, Gary Kaltbaum.